and today we're talking about the 2019 VA loan limits. Now you might be asking yourself, why does this matter? Well, first of all, even if you're not a veteran, you don't have VA home loan benefits, everything I'm going to talk about right now pertains to conventional loans. I'm not 100% certain if it pertains to FHA loans. FHA doesn't always follow conventional loans exactly like VA has in the last few years, but understanding maximum loan limits is super important. And so in 2019, both conventional and VA loan limits were increased as of January 1st, and they went all the way up to $484,350. We're going to talk about what that means here. That means as a veteran, you can now borrow $484,350 to buy a home. That's a really nice home. Now, most of us don't need to spend that much money when we're buying a home. And keep in mind, as a veteran, you can buy a $484,350 home and not have to put a single penny of your own money down. That's 100% financing, and it's one of, if not the greatest benefits that the VA home loan program brings to veterans. It also means that if in the past you were a veteran that owed more than, let's say last year, you borrowed more than $453,000, because last year, the 2018 limit, okay, in 2018 it was $453,100. And let's say you had a home that you needed to borrow more than that $453,100. Well, either you were given a higher interest rate on a jumbo loan, or you may even have had to have brought some of your own money out of pocket to stay under this amount. So what you're able to now do in 2019, if it's beneficial, you can borrow more money or you can refinance to a lower rate, because this is no longer going to be considered a jumbo loan. And I don't want to get too far down the path of like really complex stuff. What you can do, if you have questions, is you can ask them live as we're speaking. I'll see them. I'll be able to answer them for you. Or if you post these questions later because you're watching this video on a recorded type status, we'll come back and answer your questions for you. Now, a little bit of history about the VA home loan and my experience with VA mortgages. I first did my very first VA mortgage back in 1997. And in 1997, the maximum VA loan limit in 1997, let's see how good my memory is. Someone's going to probably go check me on this. You can find this information online. Was $203,000. Is there a question?
What about Santa Clara County here in California?
Who is that that's asking that?
Maria and Christian.
Maria and Christian. I'll talk to you about higher cost counties in just a minute. I'll look up Santa Clara County and let you know. Real quick before we get to certain counties where we can go higher than 484, and I love that question, by the way. Back in 1997, the maximum loan amount that a veteran could get without having to put their own money down and without exceeding VA guarantee and whatnot was $203,000. I was a loan officer back then. Before I started my own company and before I started managing loan officers, I was a loan officer, and I remember almost nobody had loans up in the $200,000 range. Now, we know that there were homes in 1997 that cost more than $200,000. This was a real big disadvantage for veterans. Veterans that wanted to buy higher cost houses, homes that cost more than $203,000, couldn't use their VA benefits, or they had to put a bunch of money down, both of which is not good for the veteran. So the VA over the last handful of years has realized our veterans make just as much money as everybody else. Our veterans deserve to be able to afford and buy higher priced houses. And over the last handful of years, the VA has been much more willing to increase these max loan amounts. And we've got other videos on our YouTube page where we talk about VA guarantee and, why the VA has maximum loan amounts. But today we're just going to focus on the good news and the simple news, and that is if you're looking to buy a home in certain parts of the country, it's now, there are more homes that you can have access to getting mortgages on because the VA increased their loan limit by 6%, a little bit more than 6% between 2018, 2019. Now, we know, let's go back to this question that was asked by Maria and I think Christian. I don't know which of the two I'm talking to here today, but there are certain areas in the country, like California, where there's been a much larger than 6% increase in housing prices over the last year. And so veterans whose income are rising and who are keeping up with inflation, they've been locked out of the housing market in a lot of areas, at least as it pertains to VA benefits. And once you can't use your VA benefits, you got to bring your own cash to the table. You're given higher interest rates. You might need to pay mortgage insurance. So this is huge news. Now, Maria asked a great question. There are 199 areas in the United States and other U.S. territories like Guam and the U.S. Virgin Islands where these are called high cost areas where 484 is not even going to do it. A starter home in certain areas of California is more than $484,000. So you can go to our website and you can find the 2019 VA loan limits by county. You can also go to the VA's website or just use Google. We, of course, would love you to come to our website. But I have printed out something. Let me look real quick. What county was it?
Santa Clara.
Santa Clara County. You know what's funny? Let's see if here it is. Santa Clara. We got lucky because California starts with a C. My printer shut down right before this meeting, and I was like, oh no, here on live camera, I'm not even able to find Santa Clara, but I did get Santa Clara. So in Santa Clara County, you can actually borrow $726,525, okay? So let's see, 726, 525 in high cost areas, okay? There may be some variances to that in certain areas, but as far as Santa Clara County goes, Maria, you can now go out and get a VA mortgage with no money down for $726,525, assuming you qualify and everything else. Do we have other questions?
Brady wants to know who would win the Super Bowl.
Brady Smoot, I'm glad you're here. Brady's a friend. He's actually family. He has called me out before for my amazing hair, and he's always trying to have fun. I don't even know who's in the Super Bowl, but here's what I will tell you. I wish the Cleveland Browns would have made it. I grew up in Ohio. For all of our military families and veterans out in the great state of Ohio, it's about time, right? The Browns went something like 2 years without a win, and then this year they had an amazing end of their season and have that great quarterback. We are excited for what the Browns are going to do next year, but I do not know who's going to win the Super Bowl. Dallas Cowboys? I don't know. Another question?
Pat says, if my husband who is a veteran does, can I get the same VA?
That's right. So Pat, I think what you're asking, if you married a veteran, if your husband served in the military and he has VA benefits, does this apply to you? It absolutely does, as long as your husband is going to be on the mortgage with you. Okay? So you would be the co-borrower or the co-borrowing spouse, and you could go out and get a loan, with everything we've talked about, but your husband would need to be on the mortgage. It's a great question. As someone who has married a veteran, these same exact benefits are extended to you. So if that's it, that's all we've got for today. We would love to help you buy a home in 2019. Interest rates are great right now. I don't care if you're Democrat, Republican, or what you think about a wall or no wall. We try to keep politics out of it here at Low VA Rates, but what I will tell you is, with all of this controversy, the stock market's down 1,000 points, then it's up 800, then it's down. This uncertainty in the market, in the financial markets and in the political markets, if you will, has opened up an opportunity for veterans to refinance to lower rates. Interest rates are lower today than they have been in the last 4 to 6 months. So if you've been fence sitting, trying to determine when you should go out and buy, now's the time to buy. Interest rates are likely going to continue to increase over 2019, but there's a great window right now. And if you bought in the last 6 months to the last year, at least inquire and find out if you can get a lower interest rate than what you were given back in 2018. Great opportunity. Thought maybe I saw 1 or 2 more questions come up. Anything? We might be able to scroll. Look at this. Let's see. Pat is asking if her husband dies. So Pat, great question. Number one, if your husband passes away, if his death was caused by injury that he received while in combat or in service, or due to medical problems that were caused by his military service, then you get these VA benefits for the rest of your life, okay? Now, if your husband passes away from something that was not caused by his military service, you don't get 100% of his home loan benefits. There are some refinance opportunities that you get. That would be a better conversation for us to have privately through the, you can send us a private message, or you can call and speak with one of our loan experts. So the short answer is yes. As the surviving widow of a deceased veteran, many of the VA home loan benefits extend to you, but there's also some variables that will determine how many of them go to you and how many don't. Another question. I got a VA loan for $670,000 in August at 4.8, but I'm trying to use a VA Streamline. Do I have to use the same bank? Okay. If you used low VA rates for that loan, then yes, you have to. I'm just kidding. You have complete freedom to decide who you want to do your VA Streamline through, and you've nailed it on the head. If I got the numbers right, that is Maria and Christian again. So you got a loan for $670,000 up in the high fours. Assuming that you can lower your interest rate by at least a half point, so from 4.8 to 4.3, the VA requires a few things, and we've done a lot of videos on this, and maybe we'll talk about this next week, but you must have made at least 6 full payments. So if you just got that loan back in August, I'm going to assume you didn't make a payment in August, probably not in September either, Maria. So you likely made your October, November, December, January, February, March. You're going to have to make your March payment, and you're going to have to make sure that 210 days has passed since you got that loan back in August. And we can help you calculate that. We've got a really slick calculator that calculates when you're eligible for a VA Streamline. A lot of people don't understand this. Don't waste your time with someone that doesn't understand the new VA regulations that came out in May, end of May of 2018, that changed the way in which veterans can streamline. There are a couple of benefit tests and other things that you have to be able to comply with, and we are experts. We're one of the largest VA refinance lenders in the nation, specifically with Streamlines. Give us a call. We'd love to help you out. You do not have to go back to the same bank you used last time. And I don't know if there were any other questions. Was that it? I think that's it. Okay, guys, if we missed anything, oops, looks like we might have missed one. We'll figure this out better later. Okay, nope. I think we got them all. Anyhow, this is Eric with Low VA Rates. We appreciate you guys watching. We'll talk to you next week, same time.